Hello everyone, welcome back to the new Financial Basics. Today we were exploring something that's already shaping your future, even if you don't realize it yet. We're talking about the digital dollar, what it is, how it works, and how it could completely change the way you earn, spend, and save money. So, let's break it all down, one concept at a time. It's not crypto like Bitcoin, it's an official US government-backed digital form of the dollar, created and controlled by the Federal Reserve. The US wants to modernize payments, prevent fraud, and stay competitive against China's digital yuan. It's about power and innovation at the same time. Unlike crypto, which runs on open blockchain networks, the digital dollar is completely centralized, meaning the government oversees every transaction. It may use blockchain for transparency, but the control stays with the central banks, not private users. Transfers that took days could now take seconds. Imagine sending money to anyone instantly. No waiting, no middlemen. Businesses could save billions by avoiding credit card processing fees. That means cheaper prices and better efficiency overall. Even people without bank accounts could access digital wallets. That's a huge deal for millions living paycheck to paycheck. The flip side? Every digital transaction can be tracked. That means less privacy and potentially more regulation. Critics warn that the governments could monitor spending habits or even freeze accounts. That's why privacy protection is one of the biggest debates right now. The Federal Reserve would be responsible for managing the entire system, issuing, controlling, and monitoring the flow of digital money. While paper money might not disappear overnight, digital currency could slowly replace it, starting with online payments, government transfers, and salaries. Instead of traditional bank accounts, people might have government-approved digital wallets, apps where you can store, send, and receive your money. Payments could go straight from sender to receiver. No banks, no delays, no credit card networks. If the public starts using digital dollars directly from the Fed, banks could lose deposits, and with them, a lot of control over lending. Supporters say the Fed could better control inflation and recession cycles, reacting instantly with monetary tools. Critics fear the same control could allow the government to overreach, freezing accounts or limiting spending. Digital dollars could be programmed, meaning, in theory, your money could be set to expire or restricted to certain uses. A double-edged sword. In times of crisis like COVID-19, digital dollars could deliver government aid instantly. No paperwork, no waiting. Because every transaction leaves a digital trail, it becomes harder for criminals to launder money or evade taxes. Cross-border transfers could become instant and transparent, transforming international business. China already launched its own digital currency. The US sees this as a race for global financial dominance. If the US leads the digital money revolution, it can maintain the dollar's global dominance, even in a digital age. The digital dollar doesn't kill crypto, it just adds a safer, more regulated option for people who don't trust decentralized coins. More than 100 countries are testing CBDCs. It's not just America. It's a global shift in how money works. For the average person, life could become easier, but at the cost of some privacy. They'll benefit from instant payments and no middleman fees, but they'll also face stricter tax visibility. Cash-based businesses will lose their advantage. Every dollar becomes traceable. Not everyone has a smartphone or internet. That's one major barrier to full adoption. Banks may reinvent themselves as service providers, offering digital management instead of storage. Some propose tiered privacy, where small transactions remain private, but large ones stays visible for regulation. The Fed could issue or remove money instantly, making inflation control more direct than ever before. Digital money introduces new risks. A hack could threaten the entire economy, not just one bank. For the digital dollar to succeed, people must trust it like they trust paper money, and that will take time. The government and media will need to educate people about how to use and secure their digital money. Younger generations will adopt digital dollars faster, while older ones may resist this change. Unlike crypto mining, a centralized system could use far less energy, a small win for the planet. Imagine a world where money flows like data, fast, borderless, and fully digital. This transition isn't just about money, it's about how much freedom we're willing to trade for security and convenience. Digital money isn't coming, it's already beginning. The only question is, are you ready for it? And that's it for today's episode of the new Financial Basics. If you found this helpful, make sure to like, comment, and subscribe, because the future of money isn't waiting for anyone. Thanks for watching, and see you in the next one.